All right, so look at this. It's Russian language by the for those who can't read Russian language. My computer crashed, as I said, and it's everything was changed to English, but for whatever reason, it's Russian. So a bit of Russian. It's written technical analysis. Okay, well, Fargo. Now we can see that it's reached nearly $60 here in 2015 and then slowly drop down. Now you need to ask always question, why did it go low in price? Now we understand when we looked at value line, we can see that earnings of during this year. Let me open one more time. Um and we can see that earnings per share, they dipped from $4.15 and they are planning to have it less, $4.05. So it's like a slight percentage of drop, and then they expect to grow it back again. But the price moved from the highest was 58, $59, and now it's 48. So it's like $10, which is about 20% down. Whereas here, it's tiny, it's less than a percent, not about 4%, 5%, right? So a bit drop, so it's 10 cents. So it's quite low. Now, the reason why earnings, you need to understand, okay, what happening right now, why they are losing, why they're making less money than before. And when you analyze this industry, especially you look at the last year, you will understand that uh, a lot of banks, they suffered because of oil companies. They borrowed quite a lot of money from banks, and last year they had troubles, and not last year, last and previous year, they had troubles to repay them. And they had certain savings, and it hit it really last year in 2015. And if you follow that type of industry, you will understand that banks, they had to restructure a lot of debts. So what do you mean by restructuring? It's when you tell the company, okay, I understand you're in troubled times. Let's, for example, give you a free period of not paying interest, and then you pay interest when the time becomes better. Or let's reduce your payment structure and you pay in a longer period, maybe not in 20 years or 10 years, but maybe 30 years or 40 years. So they increase the duration. Or maybe they'll tell you, instead of paying capital, you pay only interest. Okay, and they don't return the company. So basically, based on that, banks, not only Well Fargo, that's why a lot of other banks, they dropped in price as well. Well Fargo dropped in price and lost from 60, nearly $60, it's dropped to 40. So it's like 50% loss. It was at certain point. So of course Warren Buffett looked at this, and he decided it's much better to buy it right now and then to wait until it goes back to $60, and he will make his like 30 to 40%. And it might happen during this year. Of course, he has better access to like banks to understand how it works and etc. etc. So and he bought it. But the interesting thing about it, he bought it at the level of 51 to $53. So he was buying somewhere here. Okay, on those waves. It's recently he bought it. Okay, last quarter. For us, it's dropped here twice already at level of 44. Okay, do you remember we identified that the lowest price based on our prediction it could go to $40, but it twice already touched the point of $44, 44.50, and then start recovering. So based on technical analysis, we can assume, so that's where is the best point for entry. At the moment, we can see the triangle kind of, so we can see that the bottoms stay growing, but the tops they're holding here, so this highs. And at the moment, probably within next couple days or maybe a week, we might expect something here. So if it moves up, usually triangle works like that. If it breaks through that, it this is base of this triangle. So the size is from 49 to 45, $4. So we can expect it might move $4 up. So it's about from 49, let's say 48 to 54, right? 53, or it might move back down again to 50, 45. So and if it moves here, if you want, you can consider getting into position here. So, but again, do it based on your own analysis. So if you like this industry, if you understand it, do it. If you're not, uh, kind of better to stay out and invest in somewhere else. Okay. Now, what kind of possible strategies you can see here? So first of all, you can buy at support and hold until 60 to $80, like value line predicts. Okay, value line predicts it will go to $80. Let's have a look at one more time. Yeah, you can see 60 to 85. Now, based on our research, it might go to about $60. Now, if you buy it at level of $45, it might give you 25 to 65% return, but it might take you 3 to 4 years to get there. Okay, it might be faster, but it might take 3 to 4 years to get there. Okay, now if you that's what Warren Buffett is trying to get. Okay, so that's his kind of view on that. Then you can buy and sell using technical analysis. So based on what we saw just now, right? So for example, you can buy at level of 44, 45 on these levels, 43, like if it dips down, right? And then to sell back at these levels when it goes here. So uh, it gives you from 6 at the worst case scenario to 13% of profit on a roll. How fast is the roll? So we can see that that was, for example, here February, one roll, April. So it's about 2 months, right? Roll. And then February, April, and then May. So it's 1 month roll. Here it's 1 month roll. Here it's 1 month roll and probably another month roll. So you can make this amount of money, 6 to 13%, by buying and selling on rolls, uh, kind of once a month. Okay, so that's what we expect. In other, if we use option strategies on other four, so we can use BR strategy, buy shares and sell covered calls. But I looked at this, it's really, really low. And last night at our club meeting, we looked at this in details. And for example, look at this: the price is now 48.50, and if you sell $49 call, so it's like 50 cents above, you get last trade was 59 cents, and the spread is huge now. Okay, when I did the screenshot, the market was closed, but you can see that that's what probably. Oh, it's actually 59 and 57 here, so you get 59 cent. So it's about 1.5%, like less than 1.5% return. And then if it grows up, you make like um, even less. Like somebody can divide 59 cents by $49 of your investment. How much you get? 1.2%. Okay, that's how low options. And other companies, they will give us from 3 to 7% in option premium. Okay, that's because it's pretty stable bank. If you are trying to sell puts, you will get for $49.90 puts here. Okay, and now if we look at risk can go to $45 and you get only 90 cents, you bring it down to 48.10, right? So that's why I'm saying it's much better to be patient and wait if it drops down, especially taking into consideration that the market's so high. So if the markets are going down, Wells Fargo will be pushed down as well. So it will give you opportunity to buy it at least cheaper. Okay, so if you consider this particular company. Now, interesting thing about that you can sell naked put as I showed you and get 90 cents, but also you can buy leap call with expiration in January 2018, but you buy it only when share goes to support and sell at resistance. So instead of investing all the money here, you might get long leap call. We looked at this strategy last night again at the club meeting, but that's what you could do. By doing this, you reduce your investment capital. There is certain risk involved here because if it goes below your strike price, you'll lose all the money here. You have to understand that. But if it grows to $60, your rate of return would be much, much higher. And also, if you buy a leap, you can sell covered call against it. Let's have a look. I'll try to open the software now and show it to you. So that's the option chain, and we can see that we can go as far as 19th of January 2018. So it's 1 year and nearly 5 months, right? So what we can have here. So the last price was $48.66. And if we buy call with $45 strike price, assuming right now, I'm talking about right now, but again, I want to let you know that you don't need to buy it right now. You can wait until it goes down and then to buy. So you will pay $6.33. That's the last price trading. At the moment, it shows that it's between 6 and 6.30. So, but let's assume that that's what you're going, $6.30. Now, who can tell me straight away what's the time value here? If the current price is 48.67. So what you need to do is to deduct the difference, right? So from $6.30, which you're going to pay, you need to deduct uh, the premium, the difference. And difference between strike price and the current price is $3.67. So $3.67. So, and we received that the time value here is $2.63. And we move here, you see time value is $2.67. So basically what you do, you pay in $2.67 for the right to buy shares at $45. So you overpaying, and then you pay the difference between current price and. So if you calculate in this particular case, your investment would be only $6.33, and if the share price goes to $60, you can just sell your call. It's one option, or buy shares at 45 and sell them at $60. So your rate of return, it would be much higher because, for example, your break-even price here would be $45 plus $6.30 because you paid $6.30 and you can buy at 45. So your average price, if you decide to buy, would be $51.63. Okay, but uh, you make, would say, $9 here because of growth until $60 by investing $6 only. So you made 150% of income. Whereas if you buy at $48, invested $48, and then you sold at $60, how much you make? $12 divided by 48, it would be 25%. So that's how you can leverage yourself by buying call options. But you need to understand if the share price will go below $45, you're going to lose all this money, all this $6.30. Okay, so it's like has rewards, but at the same time it has risk. Now, if the share price goes to around $40 level, $45 level, you might consider to buy a long call instead of buying shares, assuming that the premium is as low as now, because it's quite low premium. $3 for, if you divide $3, uh, no, even not 263 divide by our investment, which is $45, it's 5.8% for 1.5 year premium. And in some shares, we can get this within 1 month, right? So that's pretty good way. So if you balance your portfolio, you can get this money from other share when you rent it, and then you can, for example, use it to get and buy it secure investment, would say, from banking industry if you want to get into the bank. Okay, so that's how you can make it here, an income, and probably that's it. And like, I mean, again, if you want to sell a call, so you sell against that particular, so you in the same way as you do shares, similar type of way.